Here's something that might shock you. In 2025, over 40,000 homeowners are successfully using refinancing to dodge foreclosure bullets that seemed impossible to avoid just months ago. And if you're one of the thousands of DMV homeowners feeling the weight of mortgage payments crushing down on you, what I'm about to share could literally save your home. Today, we're diving deep into how the shifting mortgage landscape in 2025 is creating genuine opportunities for homeowners facing financial hardship, the specific refinance programs that can cut your payments dramatically, and the exact steps you need to take to turn this crisis into your comeback story. I'm going to walk you through 3 game-changing refinance options that most homeowners don't even know exist, show you how to navigate the process without getting trapped by hidden costs, and give you the roadmap to financial stability that protects your most valuable asset. Welcome to the video. My name is Daniel Perez. Now let's get started. Let's be real about something that's been weighing on a lot of minds lately. Foreclosure isn't just a scary word you see in movies anymore. Mortgage defaults have risen slightly since this time last year, according to data from the Mortgage Bankers Association. Seasonally adjusted, the delinquency rate for all mortgages was 3.98% in the fourth quarter of 2024. Federal Housing Administration loans were the most at risk, with a delinquency rate rising to over 11%. But here's what's fascinating about 2025. While some homeowners are struggling, others are discovering that the current mortgage environment is actually creating unprecedented opportunities to turn their financial situation around. The key difference between these two groups isn't luck or income, it's knowledge and timing. Mortgage rates fell in February. The average interest rate on a 30-year fixed-rate mortgage decreased from 6.96% in January to 6.84% in February 2025. This downward trend is giving homeowners a real chance to breathe again, and I want to make sure you understand exactly how to take advantage of it. You know, I've been in this industry long enough to see how mortgage rates can make or break a homeowner's financial future, and 2025 is presenting some really interesting dynamics. The forecast for mortgage rates is clouded by policy uncertainty, but the general consensus is that the 30-year fixed rate will stay between 6.5% and 7%, according to a U.S. News analysis of economists' mortgage rate projections. Now, I know that might not sound like the rock-bottom rates we saw a few years ago, but here's what matters for homeowners facing foreclosure. Even a 1% reduction in your interest rate can save you hundreds of dollars every month. Lower mortgage rates have grown the opportunities for non-cash-out borrowers to refinance at lower rates and lower their monthly payments. The Federal Reserve's cautious approach to rate cuts means we're seeing steady, predictable movement rather than dramatic swings, which actually creates a more stable environment for refinancing decisions. What's really exciting is that unlike previous years where only cash-out refinances made sense for most borrowers, we're now seeing traditional rate and term refinances becoming viable again for homeowners who need immediate payment relief. Here's where things get really interesting. And this is something I'm genuinely passionate about helping homeowners understand. Refinancing isn't just about getting a slightly better rate anymore. When you're facing foreclosure, refinancing becomes your financial lifeline, your way to restructure your entire mortgage situation to something manageable. Let me break down the real power of what we're talking about here. When you refinance from a 7% mortgage down to a 6% mortgage on a $300,000 loan, you're not just saving a little money. You're reducing your monthly payment by about $179. That's over $100 a year back in your pocket, which for many families means the difference between keeping their home and losing it. But it goes deeper than just the monthly savings. Refinancing can help you switch from an adjustable rate mortgage that's been climbing to a fixed rate that gives you predictable payments you can actually budget around. You can extend your loan term to reduce monthly payments even further if that's what you need to stabilize your situation. Some homeowners are even able to roll closing costs into their new loan, eliminating the need for significant upfront cash when money is already tight. Now, here's where I need to distinguish between refinancing and loan modification, because I get questions about this all the time. A loan modification is when you work directly with your current lender to change the terms of your existing mortgage. Maybe they'll lower your interest rate, extend your repayment period, or even forgive part of your debt. This is typically what you pursue when you're already behind on payments or facing immediate default. Refinancing, on the other hand, is getting a completely new mortgage to pay off your old one, usually to take advantage of better market conditions or to access special programs. The beauty of refinancing is that it can be proactive. You don't have to be in default to benefit from it. If you see financial trouble on the horizon, Refinancing can help you get ahead of the problem rather than reacting to it after you're already in crisis mode. Let's talk about the specific programs that are absolute game changers for DMV homeowners in 2025, because this is where the real magic happens. The FHA Streamline Refinance is probably the most accessible option for homeowners who already have FHA loans. FHA and VA Streamline loans are available to easily refinance at a lower interest rate, even if your home value is less than the loan balance. Here's what makes this program so powerful. You need to have made at least 6 payments on your current FHA loan, and you need to show a net tangible benefit, which usually just means your new payment needs to be lower than your current one. The process is incredibly streamlined. Often no home appraisal, limited income verification, and you can sometimes even do the application over the phone. The credit requirements are much more lenient than conventional refinances, which is crucial for homeowners who might have seen their credit scores take a hit during financial difficulties. Even if your home value has dropped below what you owe, you can still qualify for this program, which is huge for homeowners who bought at peak prices. For our veterans and active military families, the VA Interest Rate Reduction Refinance Loan, or IRRRL, is absolutely incredible. VA and USDA loans offer no down payment up to 100% financing. If you already have a VA-backed home loan, this program lets you refinance to a lower rate with virtually no hassles. No credit review, no income verification, no appraisal in most cases. It's designed to be as simple as possible. The only requirement is that you certify you currently live in or previously lived in the home. You'll pay a VA funding fee of about 0.5% of the loan value, but that can be rolled into the new loan, so you don't need cash up front. The best part is there's no monthly mortgage insurance like you'd have with FHA loans, which means more of your payment goes toward principal and interest. Now, if you're in a rural or suburban area that qualifies for USDA programs, the USDA Streamlined Assist refinance might be your best option. The main requirement for this refinance mortgage is that the reduction in the principal and interest is at least 50. That might not sound like much, but think about it. That's $600 a year in savings with minimal paperwork and no credit check. For the USDA Streamlined Assist refinance, income information is needed to determine eligibility, but no other documents are needed. This means that there is no further home appraisal required when applying for a USDA Streamlined Refinance mortgage. You need to have made 12 consecutive on-time payments on your existing USDA loan, and your income still needs to fall within USDA limits for your area. But if you qualify, this program can provide immediate relief with minimal stress. For homeowners who don't have government-backed loans, conventional refinancing is still an option, though it typically requires stronger credit and more equity. Those with FHA and USDA loans may be able to refinance into a conventional loan with no PMI once they reach 20% equity in the home. If you have excellent credit and significant equity, a conventional refinance might actually save you money long-term by eliminating mortgage insurance premiums. But here's the thing. If you're facing foreclosure, the streamlined government programs are usually going to be your best bet because they're specifically designed to help homeowners in distress. Let me walk you through exactly what the refinance process looks like, because understanding this step by step can really demystify what might seem like an overwhelming process. First, you want to choose the right lender, and this matters more than you might think. In the DMV area, you have local options like DC Credit Union and USSFCU that understand the local market and often have competitive rates on government-backed programs. You'll need to gather your financial documents, recent pay stubs, W-2s from the past 2 years, tax returns, current mortgage statements, and information about any other debts you have. The whole process typically takes 30 to 45 days from application to closing, which means you could potentially be saving money on your next month's payment if you start the process now. Here's something really important about credit scores. They absolutely matter for refinancing, but they're not the deal breaker many homeowners think they are. Lenders require a credit score above 620 and ideally above 640 to qualify for a USDA refinancing program. Conventional refinances typically want to see at least 620, while FHA programs can work with scores as low as 580 for streamlined refinances. If your credit has taken a hit during your financial struggles, focus on paying down existing debt, making all payments on time going forward, and disputing any inaccuracies on your credit report. Even small improvements in your credit score can translate to better interest rates and more options. Now, let's talk about something that trips up a lot of homeowners: closing costs. and what they actually mean for your refinance. Closing costs will likely be different depending on the loan you qualify for. For example, the average closing costs for an FHA loan are 3%, 4% of the purchase price. But for a USDA loan, the average is 2%, 5% of the purchase price. I want to be completely transparent with you about this. Refinancing does involve costs, typically 2 to 6% of your loan amount, but here's the key thing to understand. Many of these costs can be rolled into your new loan, meaning you don't need cash up front. Be really careful about no closing cost offers though. The costs don't disappear. They just get absorbed through a slightly higher interest rate or added to your loan balance. You want to calculate the break-even point. How long will it take for your monthly savings to cover the costs of refinancing? If you're planning to stay in your home for several years, the upfront costs usually make sense. Let me share some critical mistakes I see homeowners make during refinancing, because avoiding these can save you thousands of dollars and a lot of heartache. The biggest mistake is focusing only on getting the lowest possible interest rate while ignoring everything else. Yes, the rate matters, but you also need to consider the loan term, total interest paid over time, and closing costs. I've seen homeowners get excited about dropping their rate by 0.5%, but then extend their loan term from 25 years remaining to a full 30 years, which actually costs them more money in the long run. Another huge mistake is not shopping around. Different lenders can offer significantly different rates and terms, even for the same programs. Don't just go with the first quote you get. Here's something that really frustrates me. Homeowners who don't check their credit score before applying. Your credit score directly impacts the rates you'll qualify for, and if it's dropped since you got your original mortgage, you might not get the rates you're expecting. Take some time to review your credit report, pay down debt where you can, and avoid applying for new credit cards or loans while you're in the refinance process. Also, make sure you request a rate lock from your lender once you find terms you like. Mortgage rates change daily, and you don't want to find out at closing that your rate has increased. I also see homeowners refinance too frequently, and this can actually hurt your long-term financial picture. Each refinance involves costs, and typically resets your loan term. So you want to make sure the benefits clearly outweigh the expenses. Calculate how much you'll actually save over the life of the loan, not just the monthly payment reduction. You know, as I've been researching for this video, I keep coming back to one fundamental truth. The mortgage landscape in 2025 is creating real opportunities for homeowners who are proactive about their situation. Total refinance volume increased in the third quarter of 2024, as mortgage rates decreased but remained above the levels observed through 2021. We're seeing increased refinance activity precisely because rates are coming down from their peaks, and the various government programs are working exactly as they're designed to, helping homeowners stay in their homes during challenging times. The key thing to remember is that you don't have to navigate this alone. Whether you're exploring an FHA Streamline Refinance, looking into VA options, or trying to understand if USDA programs might work for your situation, there are resources and professionals specifically trained to help homeowners facing foreclosure. The earlier you start exploring your options, the more choices you'll have available to you. What I find really encouraging about the current environment is that lenders and government agencies have learned from previous economic challenges. The programs we have available today are more streamlined, more accessible, and more focused on keeping families in their homes than ever before. But you have to take action. These opportunities won't automatically find you. If you're sitting there thinking about your own mortgage situation, wondering if refinancing could help you avoid foreclosure or just create some breathing room in your budget, I want to encourage you to start exploring your options now. Don't wait until you're behind on payments or facing immediate foreclosure proceedings. The best time to refinance is when you still have choices and can approach the process from a position of relative strength. Remember, refinancing in 2025 isn't just about getting a better rate. It's about restructuring your financial future in a way that protects your home and gives you stability. Whether that means switching from an adjustable rate to a fixed rate, extending your loan term to reduce monthly payments, or taking advantage of streamlined government programs, the tools are available if you know how to use them. So what's your biggest takeaway from today's discussion? Are you thinking about which refinance program might work best for your situation? Maybe you're wondering about the timeline, or how your credit score might impact your options. I'd love to hear your thoughts in the comments below. And if you have specific questions about your situation, don't hesitate to reach out. I'm always looking for topics to cover in future videos, and your questions help me create content that actually addresses the real challenges homeowners are facing. If this video helped clarify the refinancing landscape for you, Make sure to hit that like button, subscribe to the channel, and ring the notification bell so you don't miss any of our upcoming content. I've got more detailed breakdowns coming on specific aspects of the refinance process, including how to choose the right lender and strategies for improving your credit score before applying. Thanks for watching. I'm Daniel Perez, and my goal is to help you conquer your homeownership journey. See you next time.